Payoneer stock went up already 15% since we last talked about it, after the release of their Q1 results, and I think this stock may have even more room to go, as we will see in today's video. First, we will pass through the main points of this quarter results, and then in the end we will see what they mean for the stock price. So first, revenue grew only 1.8% when compared to last quarter, but when we compare it to the same period last year, we see that revenue grew 19%, which is an excellent pace. Now, this slide is interesting because it shows Payoneer's geographic distribution. Here we see that currently their biggest market is China, which corresponded to 35.5% of total revenue this quarter, according to my calculations. And Payoneer has been growing a lot in China, last year around 27%. They also have been growing a lot in Asia Pacific, 31%, here Asia Pacific, APAC, and also in Latin America, here, LATAM, where Payoneer has grown 24%. On the other hand, their North American part of the business has been losing revenue, as we can see here, a 10% decline, but in general we see a positive picture and a growing trend. Their transaction cost came down to 14.9% from 16.2% last quarter, which is a good sign. But when compared to 1 year ago, we see that transaction cost as a percentage of revenue went up actually from 14.1% to 14.9%, but it went up just a little bit. In my opinion, nothing to worry about. Their adjusted EBITDA also went up considerably. Actually, their adjusted EBITDA margin went up a lot to almost 30%, as we can see here, from 20% 1 year ago, which is great to see, and which means more cash generation, about which we will talk soon. Net income went up 265%. 1 year ago, net income was at around $8 million. Now it jumped to almost $30 million. They also updated their 2024 guidance. This was their 2024 guidance at the end of 2023, and now this is their new guidance. So while in December, Payoneer thought they would end 2024 with around $880 million in revenue, now they updated this guidance to around $900 million, which is a significant update. This means that revenue should grow around 8% in 2024. At the same time, they were saying that their adjusted EBITDA would end 2024 at around $190 million. Now they updated this number to around $200 to $210 million, which probably means more cash generation. And speaking about cash generation, Payoneer in the first quarter of 2024 generated 10 times more operating cash flow than in the same period of 2023. Now they've just generated $40 million in operating cash flow, when in the first quarter of last year they had just generated $4 million in operating cash flow. And in free cash flow, according to my calculations, Payoneer generated $23.9 million in free cash flow, right? Which means they had a 10% free cash flow margin this quarter. And soon we will see what this means in terms of valuation. They also bought $51 million of their own shares at an average price of $4.84. So around here in this line, 484. And that's interesting, the fact that in the first quarter alone, Payoneer bought the same amount of stock that it had bought during the entire previous year, as we can see here. During 2023, Payoneer bought $57 million of shares. And let's remember that the authorized amount of repurchases was increased in the end of 2023 to $250 million. So we might see additional share buybacks. And ultimately, Payoneer has around $600 million in cash and cash equivalents. So if Payoneer is a $2.2 billion company, this means that they are trading for less than 4 times cash, which doesn't sound overvalued at all for me, for a profitable company that has been generating cash on a consistent basis with almost no debt. So now that we've passed through all these points, let's go back to our DCF Excel sheet to check where this stock is trading in terms of valuation and to see what could be the upside for Payoneer stock from the current levels. Now, Payoneer is a growth company, as we can see here. They have been growing at 27.7% per year on average in the last years, right? Which is an incredible pace. And according to their new guidance, they're saying they will grow around 8% in 2024. And I think they may be lowballing here because this seems low for a company that's surfing so well the rise of international e-commerce. They also show in their Q1 numbers presentation that revenue should grow in the mid-teens area, right? So around 12%, around 15% until 2026. And after that, they tell us that revenue should accelerate. So let's project for the next 8 years an 8% growth rate on average, okay? Now, I think this is a very conservative premise, but anyway, let's type 8% first. Now, Payoneer has been presenting a 7% operating cash flow margin on average, but as we can see here, their operating cash flow margin has been improving. And if we compare quarter over quarter, as I did here, we see that their operating cash flow margin 1 year ago was around 2%. Then it jumped to around 27%, 25.9%, and now it went down to 17.3%. But on average, our trailing 12 months operating cash flow margin stands at 22.6%. Now, let's say Payoneer delivers a 15% operating cash flow margin on average for the next 8 years, okay? Now, I think this is a quite conservative premise because, as we have already seen, Payoneer has been improving its margins, its operating cash flow margin. Now it stands at 22% in the last 12 months, right? But anyway, 15% may be quite conservative, but let's try this first. And then we raise the bar, but let's first check the downside, okay? Now, about the free cash flow conversion rate, which is this item here, right? Which means how much of the operating cash flow is transformed, converts into free cash flow, okay? So this is what free cash flow conversion means. Now, comparing quarter over quarter, here, free cash flow conversion rate. Here we see that 1 year ago we were negative, and now in the last 12 months, the free cash flow conversion rate stands at 71%, though it decreased to 60% in this first quarter. But anyway, let's project for the next 8 years a 60% free cash flow conversion rate. This means that at $6, Payoneer stock should be considered overvalued, right? Because its fair price would be $5.32, which would represent an 11.4% downside. But as we've considered conservative premises, I kind of see this 11.4%, $5.32, I kind of see this as our downside, as our logical downside, because the market can do anything and the price of this stock can go anywhere, right? And by the way, nothing in this video and nothing in this channel is investment advice. On the other hand, what if Payoneer delivers a 12% growth rate on average in the next years? And as this is a very scalable business, what if their operating cash flow margin stands at 17% on average? So according to these premises, the fair price for Payoneer stock should be $7.05, which would represent a 17.6% upside from where the stock is currently trading. Now, this is not as cheap as it was, right? But my impression is that if I bought this stock today, I would still be buying a good business trading at a decent price. On the other hand, there's a chance we may see much better numbers, like, for example, a 15% average growth rate and a 20% operating cash flow margin on average, which would take Payoneer's stock fair price to $9.36, which would represent an upside of around 56%. And I don't think these numbers are unreasonable. On the contrary, I think they're quite achievable. Anyway, as always, I'm leaving this Excel sheet for you. You just have to download it from Google Sheets and you will be able to play with the numbers to see if Payoneer stock is trading at a reasonable price for you. But don't edit this in Google Sheets. Instead, download this Excel sheet from Google Sheets and then you will be able to edit the document. And about Payoneer's first quarter results, well, I like them, quite good in general, and as you've seen in this video, I still think there's upside for Payoneer stock. Well, that's it for today. See you next time.